Ladies and gentlemen, welcome back to a Bitcoin update. Today will be my final warning, unless something happens tomorrow that I need to update. For the moment, we're seeing pretty boring price action, not too much going on the longer term timeframes or even on the midterm, really. It's just short-term price movements. And so this will be my final warning until that weekly and monthly candle close comes in, which is coming in about 1 day and 14 hours from now. And I'm calling it the final warning for a very important reason. I believe that this close that we're about to see will be very major for Bitcoin and cryptocurrency as a whole, okay? It could determine, it could make or break the macro structures. And I say this, in accumulation with something very important here, something that I can actually point to, something tangible, okay, that goes past the regular horizontal levels that you might be looking at, past the regular levels like the bull market support band, price cycle lines. I'll look at all of that in this video as well. But it's this 13-year ascending support line on Bitcoin, a line that is not really well discussed, in my opinion. I discuss it very often, but I don't see many other people discussing it. And that line, as you can see, if we zoom right into the price action, we've cut up and down this line multiple times in Bitcoin's price history, but we don't really see fake outs above it and below it on closes, right? If we close above it, we close below it, we're ending up in at least a few month period of time where we're going upwards or going downwards. The shortest time that we closed above this level before dropping back below it was about 2 months, and it was back here in 2016. Ever since then, it's been a definitive, trend indicator that has pretty much represented shifts in the trend. And right now, as you can see, with this weekly candle close in just 1 day and 14 hours, we are threatening to break below it. We need to discuss that in accumulation with other things. Before we get into it, Bitcoin exchange, BingX exchange, both of these exchanges are global non-KYC. I know you guys are facing KYC regulation. A lot of exchanges are. They're going KYC. They want you to KYC. This means you don't need to add your identity to the exchange if you don't want to. If you do want to, for some reason, you can as well. But both of these exchanges are global non-KYC. Both of these exchanges have never been hacked before. And both of these exchanges have very low trading fees, very competitive trading fees. And those fees are made even more competitive with my referral link down below. Sign up with my link and you'll get a 15% permanent trading fee discount. So every single trade you do, 15% less will be paid in fees, as well as access to over $5,500 in rewards for Bitcoin and 4,000 on BingX, okay, on your sign up. So go ahead and do that. Free money, potentially up for grabs. Also low trading fees, lower with my link. Check it out. Let's get back into the content here today. All right. We'll dive back into the 13-year long ascending support line chart in just a moment here, but let's just take a step back and understand where we are in the market environment. Why am I calling this video the final warning? Well, obviously, I just explained it, the 13-year line, but it's more than that, really. It's actually the range itself. So right now, let's remove the price cycle lines. What is going on for Bitcoin? Let's actually just go ahead and remove a lot of these yellow lines here. They're not necessary for right now. Okay, on a horizontal level, horizontal range, what is important here? The important level is 61,000. Forget about 57K. We wicked down to 57K. The only reason we did that is because we wanted to go downwards and retest important levels, okay? We can actually see what those important levels were on the 13-year ascending support line chart. The important levels were the 13-year ascending support line that we wicked down to retest, as well as the bull market support band, as well as the price cycle center lines. All of these levels were at 57K when we went down and retested it. So 57K, as I've said over and over again for weeks, was a justified deviation below the actual range bottom. The actual range bottom is a rough level. It's not a precise level. It's not a concrete level. It's a rough level at around 60 to 61K. All right, I say 61K, realistically 60 to 61K, probably if we wanted to be even more specific, it's probably actually 60.5 to 61K, right? That's where the actual bottom of the range is. Why do I say that? I say that because the bottom of the range has been defined historically, let me find the chart here, by the highest ever monthly candle close we saw in the 2021 bull market, which was at 61.3K. And you can see candle closes in that rough price region bouncing around for 5 consecutive candle closes. 5 consecutive candle closes bouncing around in that rough price region, pretty much holding that level for support for the most part. There's been slight deviations below it, but for the most part holding it for support. And you can see on the shorter term charts, just getting a replication of what's going on here, we have held that level for the most part for support, again with justified deviations. On 1, 2, 3, 4, 5 separate occasions where we're testing it for the 5th time here. Again, this one being a deviation of 57K. So the rough 61K level is basically the bottom of the range. And obviously, if we're talking about macro strength, right? We need to be maintaining macro support zones. A lot of people in this correction have said, they've said things like, I don't know why you're concerned. Bitcoin has always had massive corrections during bull markets. That is true, okay? That is very true. But it's very important to note, I've lost my charts here. Very important to note, let's just go on the daily chart. It's very important to note that during regular bull market corrections, it's not really the percentage drop that matters. It's the structures that are held or broken that matters, right? If you go back to 2017, let's go to the logarithmic chart. Excuse the chart just not loading for some reason. Go back to 2017. Here we go. It's starting to load up. And you see these corrections. Like, yes, okay, they were big. They were huge corrections. 38%, right? This one over here, the next one, 41%. Huge corrections downwards. And we've seen nothing near that in this correction so far. But it's not about the percentage. It's about the structure that was maintained during those corrections. Look at the structure, guys. It held the support level that started forming months before. This one, again, held this resistance level, which flipped for support during that correction. The bull market support bought land held on both of these corrections, perfectly retested. The percentage of the drop is completely irrelevant, right? The percentage of a drop is only big because the percentage of the move was big. It's the structure that was more important. So it's not really much of an argument to say, oh, we've done this before, we've seen percentage drops like this before, therefore we can see it again. The problem with this correction is, as you can see right now, just with the bull market support band, we're threatening to break below that level, the critical levels, the structural support at 61K, the bull market support band, the pi cycle central lines, all of these levels that have historically held during bear markets are threatening to break downwards. They haven't confirmed to break downwards yet, okay? It's not over yet, but that's the concern. That's why this moment is particularly concerning. We need to hold them. We can't go down any further here. If we go down further here, we break the structural patterns. We break the structure as a whole. We enter a period of unknown, really. We don't know what would happen if we broke down here. Would we enter a bear market? Well, maybe not by the traditional definition of the bear market, because the traditional definition of the bear market has only been able to be defined based on historical cyclical price action, which has worked within the bounds of the 4-year cycle. And if we break downwards here, that would be a deviation from the 4-year cycle, so we don't really know what we would see. We know it wouldn't be good, right? Because we're breaking down from TA indicators, but we don't really know if it would be a 1-year-long bear market like it typically is. We just know that it won't be good because we're entering, again, we're breaking down from indicators. It can't be good for the price action in the medium term, but it also can't be good for us because we'd lose clarity of the situation. Right now, we have clarity because we know that these trends have historically held, and if they're held here, we know what's going to happen next, right? That's the real risk here. So it is a very intense moment. That's why I'm saying it's a final warning. Because when we're looking at these levels, we're looking at 61K. What is it? It's a monthly chart level. When we're looking at bull market support band, what is it? It's a weekly chart level. The monthly chart and the monthly candle and weekly candle are both closing in 1 day and 13 hours. So this is really it, guys. And for me, again, I want to be closing above all these critical supports. I want to be seeing Bitcoin close the weekly chart and the monthly chart above 61K, above that 13-year ascending support line, above bull market support band, above that 61K support zone. If we don't see that, I'm just going to get more and more concerned. And eventually, it's going to get to the point where if we break down below those levels on the closes and move down more on short term, you start to lose reasons to be in the market. It's like, why are we in the market right now? We're in the market right now because we think we're seeing a bull market. We think we're seeing a bull market because the historical trends indicate that the structure is similar to previous bull markets. Okay, we're holding the same levels that we've held in previous bull markets. We haven't lost them yet. If we lose them, there's no real reason to think we're in a bull market anymore, and hence there's no real reason to hold. Okay, so we need to be seeing those weekly candle and monthly candle closes in 1 day and 14 hours above the critical levels. If we don't get them above the critical levels, that won't necessarily be a sell signal within itself. But if we don't get them above the critical levels and then we start dropping down more, that's a pretty good sign to get out of the market. So for example, we can look at the total 3 cryptocurrency market cap chart. This is the altcoin market cap chart, okay? Again, altcoin market cap chart, it's fighting for its life. It's on an ascending support line here, which matches Bitcoin's 61K level. It's on a ascending support line from November 2023. And if we don't get a good weekly candle close on Bitcoin, for example, and then this chart breaks down below an 8-month-long support line, and then Bitcoin breaks down further and shows no signs of stopping and forms this double top, there's no reason to be in the market at that point because you're just gambling. So this is really just highlighting, this is the whole point of the video, the concern, the importance of this price region. And 1 day and 14 hours is not a very long period of time. So yeah, I'm watching the chart like a hawk. I'm very interested to see what would happen with those closes. Those closes are going to be the most insightful thing of the next couple of days. If they are bad closes, right, it's not going to be looking good for Bitcoin and the rest of the cryptocurrency market. All the charts right now are on critical levels. Ethereum is, Bitcoin is, total 3 cryptocurrency market cap technically is broke down from a couple of them, but it's still got this ascending support line. Everything is on where it needs to bottom. So we're just gonna have to see if that occurs, guys. That's the simple reality. Let's see what happens. I'll give you an update once it's occurred. I might post a video tomorrow. We'll see. Again, I've titled this video The Final Warning. I'm not intending to post a video tomorrow. If there's something that actually needs to be discussed, yeah, I will post one. But if it's just more of the same, there's not really much of a point, right? So we'll wait and see what happens. But guys, thank you for watching. I hope you enjoyed. Again, go ahead and check out the exchanges, BingX and Bitunix. My referral links are down below for a chance at free money in USDT rewards and also trading fee discounts for life. We've also got the Crypto Academy, bull market sale. If you want to learn how to trade, you want to educate yourself on trading, you want to learn TA, this is where you can do it. It's an educational course, very good value, unlike a lot of other courses in this market by popular YouTubers. They just charge you exorbitant amounts. This is a very good value course. You're getting 30 to 40 hours of content for a pretty reasonable price, and it's discounted right now, so check it out. And then finally, we have the VIP group on Telegram, okay? We trade altcoins 4 to 5 times a week on VIP. We post these altcoin trading signals that you can see here, these videos, 4 to 5 times a week. They've got a 77.51% win rate over the course of 18 months that I've been posting them. So check them out if you're interested in that. You're also getting access to a group chat where we discuss the market 24/7. Check that out, guys. Thanks for watching. I hope you enjoyed. I'll catch you tomorrow, potentially, or the next day. Thanks.